Hi, this is Joe. We're going to talk about a specific pattern that's probably made me more money than anything else that I've done over the last 5, 6, 7 years. I typically look for this pattern on a longer term time frame, like a weekly. But the pattern I'm going to show you today, or the example, is off of an hourly chart. And I've noticed more and more, I've been seeing more of these taking place on an hourly basis. And I find it to be a really attractive pattern for swing trading sometimes. So let's get into the charts, and I'm going to show you exactly what I'm looking for. It's a condition based on ADX and price action. So we're going to start with the four charts, and I'm going to use BioMarin, BMRN, as my example. If you notice what's taking place on the monthly chart, we've got a stock that's really been going sideways for a long time. It sold off and then really started working sideways from 2016 on. So long period of sideways action on the monthly. Now that's not a condition for this trade on the hourly time frame, but I wanted to point out that if you can find conditions that situations where you have a condition in place on a lower time frame and the bigger time frame supports some kind of more of a substantial move, then I think you've got kind of the best of both worlds. I mean, you can time it from a short-term standpoint, but you've got the backdrop and kind of the wind at your back on the higher time frames. And I've noticed a lot of times, even if I'm doing a swing trade, if I have the monthly and the weekly in place, I tend to see the move be a little bit more explosive, maybe make a little bit more money for me. So let's go quickly to the weekly chart. Notice what took place here. You had the drop from the bear market decline, but it was a lot less so than the market, and also more mild, I would say. Even though that it did have a good drop, it really wasn't as bad as the market, and it was very quick to retrace back up and recover. So the point I'm going to show is on the daily chart. After we'd already sort of broken out on the weekly, and I knew I had this big base developing on the monthly, we go to a daily chart, and I'm going to zoom in on the daily, and we are focused in right on this zone right in here. In fact, I'm going to just circle this spot because I think it's sort of important to recognize that we've got I know at this point that we'd broken through the 100 level with pretty good momentum characteristics on the weekly chart. I knew I had a big base that had been developing for a long time on a monthly basis. And now I'm getting a pullback, the first pullback after the breakout to the 18 MA, and the 18 MA is rising and the 40 MA is rising, and they're both rising right about the same rate. So that's a very good condition to buy on a pullback. Now, everything that I've brought up so far is independent of the actual signal. And what I mean by that, I'm going to go to the hourly, is that this signal is a standalone signal. I don't need to have all those other things in place on the higher time frames. I don't have to have the monthly, weekly, and daily in place. I just wanted to point this out because if you do have those things in place, it really increases your odds of having a much bigger win or the potential of something to be much more explosive for you. So let's look at this specific area that I've circled, and then I'm going to go down on the ADX scale and I'm going to sort of box this area. And so there's two things taking place. On one end of the spectrum, I've got a price pattern where you're just working kind of sideways, fairly quiet and working sideways. And then if you look at what the ADX is telling you, the blue line dropped down under 25 and it dropped down below the green and red DI lines and stayed down there for a pretty long period of time. And when I say a pretty long period, I like to see at least 20 bars. So in this case, it would be 20 hours. I do this pattern a lot on a weekly chart. In fact, I'd probably use it on a weekly more than anything. And so it would be 20 weeks if I'm doing it on a weekly chart. So I'm going to erase this just so we can see. So this black line or gray, dark line going across is a 25 level. And the longer you can spend underneath 25 with price working sideways like this, the higher the potential when you eventually break out. So that's sort of the the primary setup and the thing that I'm looking for. And if I see a stock that has spent a significant amount of time with the ADX going sideways, down at 15 or 10, or just kind of working underneath both DIs, underneath 25, I'm going to write this stock down and start to stalk it a little bit. I'm going to zero in on a little bit more here because I want to show one thing in terms of what I'm looking for on the DI lines. So these lines, when the ADX is low, we don't have any trend strength. The trend strength is low. But the one condition that I am looking for the DIs is a time where if I'm going long, I want to see green DI cross up above, and then instead of just crisscrossing right back below, hold the red DI line. And when that takes place, and let me just zero in a little bit more, hopefully we can see this a little bit better. In fact, I'm going to go to the ADX only screen so you can see it a lot better. So if you notice, the green DI crossed up. It didn't really take out the red DIs. It got above 25 briefly. But what's important is when the stock pulls back, it doesn't break back below the red DI. Now, I've talked about this in other situations, but I haven't brought it up in the condition where we have a low ADX for a period of 20 to 30 to 40 bars, where you've got a very quiet pattern in place. And if you've got that, you definitely want to draw a trend line in place. And this is pretty much how I would look at this. I mean, you could draw a downtrend line, but the goal is to try and make the trend line as horizontal as possible, frankly, because I noticed the downtrend lines, the steep downtrend lines, are not as reliable in this pattern. I really am looking for kind of a horizontal break, but in this situation, I've got slightly lower highs, and I'm totally fine with that. I've got 3 key levels. And the moment I see this breaking above, where green is above red, and we've got low ADX in place for a while, I'm a buyer as soon as this kicks in. So we bought this, and we actually did this off of a longer term pattern because we didn't really want to jump in and out. But you could have certainly done this trade based on the hourly chart alone and put in your stop, somewhere underneath the low of this bar. And, your entry point is going to be somewhere, hopefully, if you see it during this bar, even if you came in the bar after, or if it had the pause bar and then you bought it on 110 crossing back above those 2 bars, there's nothing wrong with that. That's also a really good signal. So we've got a couple things taking place here. The break of the downtrend line, but you have this ADX condition in place. And trust me on this, if you go searching for this pattern on any time frame, I've done it on a daily chart, although they don't happen as often on the daily. Weekly charts, if you look at enough patterns, you will find this. But on an hourly chart, I'm just noticing more and more you'll see this condition in place. And you're looking for 20 hours at least of sideways consolidation in price, and you want the ADX to be low for a period of time. Trust me on this. Go looking for this pattern. Use this breakout point. If it fails, it fails. You might have to take a second stab, and that's part of trading. But I can tell you that when they work, you get really explosive follow through just like this. So hope this was helpful. Hit that like button, and we'll talk to you soon.